What do I do this week? Risk off? Do I just sort of turn everything off, pack up, and come back after Easter?
Well, that's probably a good idea. You know, times like this, there's probably not going to be a lot of momentum in the markets. Clearly, geopolitics has taken the edge off it. But, you know, when you look at it, the markets haven't really reacted as much as they could have with something like Syria. And in a way, why should they? Because the Russians have been bombing in Syria for a while. Now, OK, we've got the Americans with certain targets, and people sort of think the Americans are just going to be looking at targets. We've got a fleet going to North Korea or near North Korea. OK, that's going to raise things a bit, but I think this is part of the new regime in Washington. You know, the last regime was happy to keep things contained. President Trump, as we know, isn't of that character. And is likely to, it's the new normal is to go eyeball to eyeball. And maybe that's partly how geopolitics are going to work for the next few years.
You're still bullish on equities. That being said, so at least when you look at the underlying sort of fundamentals here, but you're also eyeing major signs of a turn in sentiment. It's one of my favorite questions here. What are you watching specifically for a turn in sentiment? Is it the VIX? Is it yields? What is it?
Yeah, well, I think I look at a combination of things, gold, for instance, but a lot of these indicators aren't doing the same as they used to. For instance, you know, gold might actually be quite interesting. Increase in inflation, perhaps under Trump. Possibility. If things turn worse under Trump, then, you know, gold might be a bet both ways. So we might see gold move forward while the economies underlying are doing OK. You know, I think the economic indicators aren't too bad. And my experience is that politics dents markets in the short term, but it's economics that wins through in the long term. And the economics actually don't look too bad still, as we saw from Janet Yellen last night.
Absolutely. But, yeah, I guess at these levels, when you have valuations at this point, I guess it exacerbates the move down when we do see things, well, kick off slightly. I want to bring your attention to one of our charts here. This is 7685, and what it basically shows, three panels. You have your city economic surprise indices, Europe, top, EM, and then you have the US. A lot of these have started to roll over, and I guess to your point, they've been good, but at some point, the element of surprise wears off. Is this a reason to sell?
Well, this chart is one of my favorite indicators, you know, the shocks and surprises indices, because markets are sentiment-driven. They react to surprises, they react to new news, and I think these indicators are often quite good at looking at that. Now, you're going to expect it to tail off after a time, because after a time, people cease to be surprised on the upside. They cease to be shocked on the downside.
The hurdle's quite high.
So you're never really going to get it blow out either way, but I think the interesting thing, as you see with the chart, is that it's been pretty strong recently. We saw a bit of a surprise. People's sentiment was quite good, you know, just around the election. Indeed, I think it starts moving around, you know, August, September, before the election, when people are starting to be more confident. Now they're starting to be surprised less, and so you see these indicators wear off. But it's still at an absolute high-ish level. And I think that really reflects the fact that the underlying economies aren't doing too bad. There are no real disasters out there. New news may come through, which is what this will indicate. But at the moment, I think the markets are fairly sanguine about the underlying economy.